Hi guys, this is Toby Mathis, and today we're going to talk about finding the right real estate investment property and how to make the right decisions. Because let's be serious, there are so many factors that you have to consider when selecting an investment property, from location to the demand from rentals, and all are equally important. But what it really comes down to is getting to know the market, who your potential rentals are. That will help you focus on the right type of property. Plus, your risk tolerance. You'll narrow down your investments just by knowing what you're willing to take on, as well as far as elements of risk. And so let me just kind of break this down into little bite-sized pieces so that it starts to make sense. A lot of people, when they're investing, they think of the bread and butter. Hey, I'm buying a forever property that I'm going to own for 20, 30 years. That's going to generate cash flow. For some of you, that might be the case. It's not all of you. And then it really comes down to the cap rate. So we have kind of a joke like, hey, if you want to lose money, buy on comp. You want to make money, buy on cap. And all that really means is, if you want to lose money, listen to your real estate agent who is saying, here's what the houses are in this neighborhood are going for, this is what your house is worth, as opposed to breaking it down saying, what's the return on my investment? And so I teach infinity investing all the time, and one of the first things I say is you invest in assets. And the difference between an asset and a liability, same house, assets put money in your pockets, whereas a liability takes money out. What's the difference between a property that's an asset and a liability? It may be as simple as the debt service and how much a loan costs on it, whether you're buying it for cash or whether you're buying it with a loan. Because just because you have a net operating income and you're like, wow, this is a great winner, if you're giving it right back to a bank and then coming out of pocket, that's actually a liability for you, and you're only going to last a finite period of time. So it really comes down to knowing what your numbers are. It also comes down to what type of investor you are. So for example, right now we're hearing all this talk of the crash of the real estate market, massive foreclosures, property values are going to die and everything else. When I invest, honestly, I don't care about the value of the property. Once I buy it, I don't want to know what the value of that property is. And I say that pretty darn earnestly, because I don't want to be tempted to buy it. Unless I could trade it for something else, I might 1031 exchange it into something else. But realistically, what I'm buying is an income source. That's the type of investor I am. In which case, I'm looking at the vacancy rates. I'm looking at how many jobs are moving into an area versus how many housing units are being built. I'm looking at the crime rates. I'm looking at the vacancy rates. I'm looking at how often they default and the relative quality of the renters in certain areas. And then I gravitate to those particular areas where I get a nice return without having to stress out. That's the type of investment or investor I am, but that may not be you. You may be the type of investor who says, I love Airbnb properties. I'm willing to take on a little more risk, but I know that there's great return. And it may be that you're not even buying the properties. You just may be doing the arbitrage of, I'm renting a property and I break it out into its components and do Airbnb. Or better yet, maybe you're an investor who's doing recovery housing or transitional housing for inmates, or working with government organizations where you know that if you're smart, you're going to get grant money, plus you're going to get guaranteed money on a monthly basis per bed. I mean, I have clients that bring in $6,000, $7,000 per property guaranteed, plus they get grant money from the state as well. But they're dealing with a particular type of tenant. They may be dealing with recovery housing, or they might be dealing with residential assisted living, or they may be dealing with transitional housing. And they're willing to take that on. Maybe that's within their skill set. Maybe they have time or expertise. Maybe they were a nurse. Maybe they worked in those types of facilities, or maybe they have a personal commitment to getting involved in that type of activity that makes that type of investment appeal to them. All I'm saying is that there's a whole bunch of different types of investing out there, and there's no rule as to which one's the best. What it comes down to is what's the best for your personality. Again, I am a set it and forget it kind of guy. Not everybody's there. Some people love developing and flipping. Some people, that's in their blood. When they hear real estate investment, they're thinking buy low, sell high. right? And that's in their DNA, and that's what they like to do. To me, that I'm not interested in that. But for some people, they want to go buy a property. They know that they can put some elbow grease into it and that they're going to net a nice return. And then maybe they take that money and they invest it in something else. But in all reality, that is just a means to an end to generating a return. Maybe they're looking at it saying, hey, every 6 months I want to turn a house. Maybe I want to buy this property, I want to put 4 properties on it, and I want to sell those 4 properties, and they're going to generate their income. To me, that's an active investor. That's a dealer, that's a developer, but that's still an investor, that's still a real estate investment, and that may speak to you. Maybe your unique skill set says that's appealing. I like taking things that are broken, fix them, sell them, and you love doing that. Me personally, I like buying it, setting it, getting the rents, getting the tax benefits from that depreciation, and sitting back. And I'm a cash investor. It's not fair to say this is what you should do if you're not in a position to buy for cash. Although I will say this, look at your IRA, 401k, Roth IRAs, Roth 401ks. Look at your retirement plans, because you can actually invest inside your retirement plan if it's the right type of plan. If it's not the right type of plan, 9 times out of 10 you can roll it into the right type of plan, a self-directed IRA or self-directed 401k or self-trusted 401k, and you could invest directly in your plan. There's so many ways to get access to capital too. So many people are like, well, I don't have enough cash, I can't buy it. Do you have a HELOC on your house? Can you take that? Can you use that to invest in a property? Would that be a way? Or do you have a business? Sometimes you have lines of credit. Sometimes you have zero interest lines of credit. That'll allow you to get into a property and then you buy, rehab it, rent it out, refinance it, and then repeat. They actually call that the Burr method. It's actually a thing. And you're going out and you're saying, hey, if I can just get into that first property, put a little bit of money into it, put a little bit of elbow grease, and it's great. Maybe that's not you. Maybe you're somebody who says, you know what, I don't want to touch the property. I don't want to fix a toilet. I don't want to look at a roof. I don't even want to look at the property. I just want the return. That puts you in the category of being a very passive investor, in which case you want to look at very specific things like, do you have good management? What's the area like? Is there high crime? How are the schools? How are the job market there? You know, what is the historic vacancy rate in that particular area? And you're looking at those things. Is the city that you're investing in solvent? Like, are they going to jack up real estate taxes? You know, what is their history on these things? You're looking at that because you want the least amount of disruption. If you're willing to take some aggravation and you're willing to reach a little bit, then you might go into some of those areas, but you might have some mitigation techniques that you're able to deploy. I could tell you, because I'm here in Las Vegas, I remember people during the Great Recession and a bunch of people were going to be flippers, and they would buy in areas and they would go and they'd put their tools, they'd dump a bunch of stuff into a building. The next day they came back, their tools were gone, the building was stripped. It depends on your personality type as to whether you can take something like that and turn it into a positive and get over it, or figure out how to mitigate that. It's not everybody. So when you're a real estate investor, you really have to think about, what am I willing to commit to? And I'll tell you, I'm pretty mellow, but there's people who they think, I can't own a single property. I'll just do syndications. And I say that is fantastic. If you're a busy person, maybe you're a doctor or a busy professional, you might say that's as good as I'll get. Or you say, I just don't know real estate. Maybe I'm going to, join one of those groups where they invest in partial ownership. Or maybe I'm going to do a REIT, and I'm just going to buy a real estate investment trust on the stock exchange. And I'm just going to buy like my Federal Realty Trust, PSO, any of those. And I'm just like, you know what? I just want to get the income stream off of those. And I don't want to know what I'm investing in. I have no desire to pick paint, pick property managers, or get involved in anything that has to do with real estate. It's all up to you, and they all have positives and negatives. And there's opportunities in each and every one of those areas I just laid out. There's fantastic opportunities, because the truth is that when the market is shaky, when there's fear, that's when you should be starting to trigger a little bit of greed and saying there's opportunities abound. And I tell you, if this market continues to go fluctuates during 2003, if the Fed continues to raise interest rates, if people continue to do the doom and gloom, there will be opportunities for you, and it's just figuring out which one fits your level. At the end of the day, it's actually very, very simple. You look at, what is my exit before I enter, and is that return commensurate with the risk? And that's That's basically it. You're just looking at, you're trying to ascertain as much information so you can determine, is this a wise decision for me? And what is my exit if I get in trouble? That's probably the most important thing that you could ever say, is know your exit before you enter. Know how you're going to get out of a deal before you buy into a deal. If you're buying in with a group of investors, and all these investors have appetite for properties, and something happens, your wife gets sick, your spouse gets sick, or your kids get sick, or something bad happens, you get ill, or something changes in your life, and now you need money, you need to know that you have a quick exit. And there you go. If you're surrounded by investors that you invest with and that you have a great community around you, you're just saying, like, who will take up my property and give me cash? And you're going to have people raising their hands all over you. You got to know what that exit is first. And sometimes it's great to invest as part of a group. Some of you guys are lone wolves. You don't care. You're like, I'm going to buy a house and I'm just going to flip a house every 3 months, every 6 months, whatever it is. Maybe you love buying beat up houses, and maybe you're just going to do once a year. And I'm going to live in the house until I sell it. I've known folks that did that really well. Or you're one of those house hackers where you buy into a property, then you rent out rooms, and then you move into another one and do the exact same thing. I've had folks retire off as little as 3 properties doing that. It is up to you and what fits your personality as to what will work. And you don't let anybody sit there and tell you, no, that's a bad one, this is the best one. There is no best one. There's only what is good for you and what fits with your personality. And the best thing you could do is invest in educating yourself on all the different strategies that are out there, so you can see which one or which ones speak to you and fit your personality. Because a lot of times I hear this, I had no idea that existed. You loved working with veterans? I love veteran housing, right? And then I had no idea you could do veteran housing. Absolutely. Or you're somebody who loves working with old folks, and you just love the residential assisted living area, and you had no idea there was operators out there that you could just lease to, and all you are is a landlord, but you love and you feel fulfilled because you're helping people out. I mean, personally, that's a lot of what I do. I like renting to organizations. They might give you a 5-year lease and say, hey, I'm doing X, Y activity. Maybe you're doing transitional housing with the Department of Corrections. And so you have nonviolent offenders or whoever it is that you say, this is the type of person I want to work with, that are coming through, and they're coming through your property, but you're just leasing to one organization. And you say, this is perfect for me. I'm helping society, and I feel fulfillment, and I'm making money. At the end of the day, there's so many different possibilities. Learn and get acquainted with the different types of investing you could do. Everything from house hacking, subject tos, tax liens, foreclosure sales, doing your bread and butter, single families. Maybe you're a multifamily type person. Maybe you like syndications. Maybe you like REITs. All those things are possibilities. Student housing, doing an arbitrage, house hacking. Figuring these things out to where you're like, hey, you know what? I can take a property and I can break it into segments, and I can actually provide affordable housing for 5 or 6 people and get twice the return, because that's about what it is, versus if I just rented the whole property out. There's so many different things that are available to you. It all depends on what speaks true to you. The only way you're going to know that is by going out there and learning what those things are and getting some experience in those areas. Doesn't mean you go buy an investment and everything, but you'll know when you start hearing of things and it starts piquing your interest. Some of you guys live in resort areas, or maybe you're living near the beach, and you start realizing, wait, I'm a few Airbnb away from never having to work again, and I get to just kind of hang out with people and visit my properties, and I could say, hey, I'm only going to rent them, a minimum of a week at a time or 2 weeks at a time. Like, you could put all sorts of different conditions. You could say that whatever fits your personality. There's no right or wrong answer, as long as the numbers are positive and go back in your pocket. And so that's what it comes down to, is getting that pencil out, crunching it, doing some actual investigation as to what you're comfortable with and what you decide whether or not this is going to fit your personality. And once you start narrowing that thing down, then working with people that are in that area so that you can decide, here's a great opportunity for me that I'm willing to pull the trigger on. And that's all it comes down to. And at the end of the day, it's not just investing, it's your life. People always talk about this work-life balance and stuff. To me, it's always about having financial freedom and getting to do what you want to do. And it's not really work if you like doing it. And so I say gravitate towards things that you really like doing, because then you're never working. And you get great returns, and you can relax, and you can enjoy life, and that's what it comes down to. It's not hey, this is the best strategy ever, or this one, or this one. No, it's what works for you. And we want you to be really successful.